For most of human history, people paid no income tax, no withholding tax, and never watched a portion of their salary disappear by law. So what happened? How did we reach a point where every one of us gives a part of our earnings to something called the state? The story actually begins long before modern governments, thousands of years ago. Early great civilizations like ancient Egypt, Mesopotamia, and China all faced the same problem. Roads, armies, grain storage, defense, all of it required enormous resources. And no ruler could shoulder that burden alone. So the earliest forms of taxation emerged. But money didn't even exist yet. People paid with grain, livestock, cloth, oil, or labor. Taxation wasn't the state's burden. It was the people's. Yet this system revealed an important truth. Power didn't belong to the one who demanded taxes, but to the one who could make people pay them. As empires expanded, wars grew longer, cities swelled, and needs multiplied. Taxes were no longer just for survival. They became tools of control. The Roman Empire financed its roads, armies, and monumental structures with taxes collected from its citizens. The Ottoman Empire survived for centuries through agricultural taxes. Throughout history, taxation became the oxygen of every state. But here, a critical question must be asked. What did people receive in return for the taxes they paid? This is where the idea of justice was born. Because taxation wasn't supposed to be mere collection, it was meant to function as a social contract. You support the state, and the state protects you. But that promise wasn't always kept. Some rulers used taxes to strengthen their nations. Others spent them on personal luxury. That is why the history of taxation is also the history of revolts, uprisings, and new orders. From the French Revolution to the Boston Tea Party, many great social turning points were fueled by economic pressure and tax resentment. And today, the same question still echoes. Are taxes truly collected for society, or simply to sustain the system itself? In the next episode, we'll explore how the modern tax system was built, who actually holds power through taxation, and why escaping taxes is now nearly impossible. The foundation of the modern tax system was shaped by two major forces, the Industrial Revolution and the rise of nation-states. As the Industrial Revolution unfolded, cities expanded, production accelerated, trade intensified, and population surged. With this growth came an entirely new set of needs. States no longer had to fund only roads, armies, and storage facilities. They now had to finance schools, courts, hospitals, ports, civil servants, and an increasingly complex bureaucracy. Taxation could no longer remain a temporary payment, collected during specific events. It had to become permanent and mandatory. In 1799, Britain introduced the first modern income tax to finance the Napoleonic Wars. It was originally promised as a temporary measure to be repealed once the war ended, but it was never repealed. Income tax provided governments with a predictable and stable revenue stream, and soon other nations followed the same path. During World War I and II, tax rates increased further, and governments took an even stronger role in managing their economies. This is exactly why escaping taxes today is almost impossible. Modern society simply cannot function without them. But the system was about to transform yet again. In earlier centuries, taxes were collected at the end of the year. Today, they are taken before people even receive their paychecks, or automatically deducted from income as it flows. This shift created a massive advantage for governments. People pay taxes without even noticing. Taxation became an invisible habit embedded into daily life. Yet the real power didn't belong solely to governments. Over time, economic elites, corporate lobbyists, and financial institutions gained influence over how tax laws were written. Special exemptions, deductions, and loopholes were created for certain industries, countries, and individuals. So even within the same system, not everyone pays equally. That is why the debate around fair taxation has become one of the biggest questions of the modern world. Is there a way out for the ordinary citizen? Almost none, because tax evasion now carries severe legal penalties. And in the digital age, governments can track the movement of money in real time. The tax system has evolved into a technological mechanism of oversight, not just an economic one. But the real issue remains: are the taxes we pay truly being returned to society? In the next episode, we'll uncover where every dollar actually goes, how a government budget works, and what role citizens really play in this massive financial machine. We pay taxes on every bill, every paycheck, every grocery receipt. But what happens after that? Governments use the taxes they collect to finance their core responsibilities: healthcare, education, security, justice, infrastructure, social assistance, and public services. In a sense, taxation is the shared wallet of society. But how that wallet is spent is not always transparent. A government budget is a plan of revenue and expenditures, yet most citizens go through life without ever seeing it. Every year, however, that budget reveals exactly where tax money is being allocated. In some countries, the largest share goes to defense. In others, to social services. In others, to debt repayment. Because governments do not use taxes only to provide services. They also use them to pay for past decisions. This exposes a crucial truth. Taxation doesn't just carry today's costs. It also carries the burden of yesterday's choices. Public projects are not always efficient. Waste, corruption, poor planning, and unnecessary investments can drain tax money. That is why democracy is not meaningful through voting alone. It also requires watching the budget. This should fundamentally be a civic duty. When citizens demand accountability for every dollar spent, the system becomes fairer. Modern economies increasingly adopt open budget practices, making public expenditures visible to everyone. Yet a critical problem remains. People pay taxes, but they often don't feel what they receive in return. If roads are broken, hospitals overcrowded, or education inadequate, people are right to ask, where are my taxes going? Because taxation is not just a legal obligation, it is a social trust contract. When the state fails to uphold its end of that contract, trust erodes and tax resistance emerges. Still, we must imagine the alternative. Without taxes, electricity, water, security, justice, transportation, healthcare, and education would all become fully private and inaccessible for most people. So the issue is not taxation itself, but how it is managed. In the next episode, we'll examine how governments can profit from taxation, whether they truly protect citizens or simply reinforce the system, and why this structure is so deeply debated. Governments don't just collect taxes. At times, they profit from them. And this is exactly where the debate begins. Is the state exploiting its citizens? Because taxation is not only a tool for gathering revenue, it is also an economic and political power mechanism. When a government raises tax rates, it doesn't just strengthen its budget. It shapes the behavior of its citizens. A high tax on cigarettes aims to reduce consumption, while high fuel taxes are meant to encourage public transportation. But these policies are not always driven by public need. Sometimes they serve primarily to expand the state's revenue. In many countries, indirect taxes, the kind we pay every time we make a purchase, make up the largest portion of total tax collection. This system disproportionately affects low-income citizens, who spend a greater share of their income on consumption. And this strengthens the argument that taxation is fundamentally unfair. So do governments actually profit from taxation? In reality, most states still need to borrow just to meet their obligations. In such cases, tax revenues may even be used to pay interest on existing debt. But in some periods, tax collection exceeds spending. creating surpluses that can significantly increase a government's political power. And this is where the real problem begins. The lack of clarity makes people ask, are taxes truly collected in exchange for services, or to strengthen those in power? The answer varies dramatically from one country to another. When transparency, oversight, and accountability are weak, collecting taxes is easy. Using them effectively is the hard part. Additionally, major corporations can influence tax policy. Large conglomerates, energy giants, tech corporations, and financial groups may pressure governments to secure lower tax obligations or favorable exemptions. This reinforces the public perception that the wealthy pay less and we pay more. History teaches us something important. Taxation is not a burden to be hated. It is, in principle, society's shared investment tool, if managed fairly and transparently. The real issue is not whether taxes exist, but who pays how much and what they receive in return. In the next episode, we will explore the true roots of this inequality, how the wealthy legally minimize their taxes, and why ordinary people cannot do the same. Evading taxes without a legitimate reason is a crime. Refusing to pay taxes is illegal. But avoiding taxes using legal methods to reduce what you owe is an entirely different matter. And this is precisely where the major divide between the wealthy and ordinary citizens begins. While the tax system appears equal on the surface, not everyone participates in it equally. High-income individuals, major corporations, and financial groups work with tax experts, lawyers, and consultants to create tax advantages tailored specifically for them. Offshore accounts, tax havens, transfer pricing, charitable deductions, investment incentives, real estate depreciation. These are all legal tools for reducing tax liability. Some people don't ignore taxes. They shrink them by design. This may be lawful, but it raises serious ethical questions. While a low-income worker pays tax up front on every paycheck, a multi-billion-dollar corporation can reduce its tax burden to nearly zero. Naturally, this leads to the question, is the system fair? The answer varies by country. Yet most experts agree that tax systems throughout history have often been shaped by the interests of the powerful. And the complexity of tax codes is no accident. Complexity opens doors for those who understand. It encloses them for those who don't. But here's the interesting part. Tax benefits aren't exclusive to the wealthy. Governments provide incentives available to everyone. Education deductions, healthcare expenses, entrepreneurship programs, energy efficiency credits, home ownership advantages, and more. Most people don't even know these rights exist because taxation has become something people fear and avoid studying. That's why knowledge is the greatest tax advantage. Proper accounting, proper documentation, smart investing, and strategic spending can all reduce a person's tax burden. The point isn't to escape taxes, but to avoid letting taxes overwhelm you. In the next and final episode, we'll explore how ordinary citizens can turn taxation into an advantage, how they can strengthen themselves within the system, and why changing our perception of taxes may ultimately shape our future. Tax often appears to be a burden people instinctively want to escape. Yet when used correctly, taxes can become one of a citizen's greatest financial advantages. Because taxation isn't just money collected by the state. It's a tool governments use to guide economic behavior. The state rewards the actions it wants to encourage through tax reductions. Education expenses can be deducted. Energy-efficient home investments can bring tax benefits. And legitimate business expenses can lower taxes for small entrepreneurs. In other words, when understood properly, the tax system is full of hidden opportunities. But using these opportunities requires awareness. Most people only think about taxes at the end of the year, when in reality, tax strategy must be planned throughout the year. Spending, investing, insurance, savings, donations, all of these decisions affect your tax burden. That's why tax knowledge is not just for accountants. It's essential for everyone. Is it possible to avoid taxes entirely? The answer is, of course, no. Legally, it's impossible and severely punished. But can I turn taxes to my advantage? The answer is a strong yes. Because the tax system exists not to punish you, but to guide you. The more informed you are, the less you lose. The real issue is not the tax paid to the state, it's the citizen, demanding value in return. Without transparency, accountability, and fair distribution, no tax system can remain sustainable. That is why taxation is not just an economic matter. It is a democratic responsibility. Asking where your taxes go, following the budget, knowing your rights, and speaking up when necessary are all part of being a citizen. Remember this, tax does not make you a victim of the system. Combined with knowledge, it makes you a participant in it. For thousands of years, what kept states standing wasn't just tax revenue, but the trust and approval of their people. Now I invite you to reflect. Do you see taxation as a loss or as a tool that can help shape your future? Share your thoughts in the comments, because the answer to this question can shape not only individual lives, but the destiny of an entire society.